Well, who's really going to win this battle of the behemoths between China and the United States? Is this trade war going to be won by one of them? Or is there a third contestant who's going to step into the ring and beat both of them? Well, I think it could very well be that third. So I'd like you to stay with me today on this episode of The Steve Beeman Show. Welcome back, my friends. It's good to talk with you. Obviously, I'm enjoying the communication we're getting through TikTok and some of the other communication systems. We have the Twitters, then all that, or the X's. I enjoy it, and I welcome you to keep bringing those questions and comments. This podcast was done specifically at the request of a listener who saw a little short that I'd done and asked that I do a podcast about the trade war. And I want to do it because we're in an environment now in the Western world, in the U.S., where we're seeing these trade things go on. And we have a very real trade war beginning with China. There's a lot of questions about who can really win that. So I'm going to go through 5 channels that we need to look at on that to score the U.S. and China and see who's more likely to come out on top. But I want to throw into this a third player who I believe is going to be the ultimate winner of this trade situation. So we're going to tackle that on this episode, and I'm looking forward to it. So buckle up and let's go take a look at the trade wars, who's going to win or lose. In this podcast, I'm going to cut through the noise of the mainstream media. I'm going to cut through the noise of the cable channels. I'm not pro the Trump tariffs. I'm not anti the Trump tariffs. I'm not pro anybody on this or anti anybody. I'm looking at the facts as they exist today. We're going to come up with a realistic look at who's going to win this trade war. Now, in today's geopolitical stuff, the U.S.-China trade war is a tug-of-war between two behemoths, as we know. They're looking at tariffs, GDP rates, and political, soundbites. We see that. But beneath that, beneath the headlines and the partisan spins, there's a far more consequential battle taking place. And that's a long-term struggle for control over the global economy. Now, we know that from 1940 really up until now, the United States has dominated the globe. China doesn't like that. They want to dethrone the United States for the 21st century. They see themselves as the global leader. Well, can they do it? Can they dethrone the dollar and dethrone America? I don't know. Let's take a look. I mean, I want to look at not just who's winning, but how we define winning. Because there's this battle on the other dimension between what I've called industrial capitalism and decentralized capitalism or idea capitalism. And I think that is the third rail here. So I want to talk about how that compares to those two industrial age behemoths and who's actually winning. So I talked about 5 dimensions I want to look at. And we're going to look at technological dominance. Who's really winning that? Is it the US or China? Who has the upper hand in technological dominance? We're going to look at capital leverage. Who gets more bang for the buck in their capital? And where's the capital coming and going? We're going to look at cultural influence. Does China's or the US culture really dominate the globe? And we'll talk about what that means, but that's a big question because going forward into the 21st century, continuing into it, whoever controls that culture has a lot of influence, a lot on the young minds coming up. We're going to look at supply chain resilience and ultimately what I call ideological sustainability. Who really can last? Who has the political power, the economic power, the moral power to last through a trade war? Well, let's continue to take a look. As I said, and I'll continue to come back to this, I don't think we measure this victory by GDP, steel rates, and tariffs. I think it's measured in the new economy, the decentralized economy. So I think the real winner may not be those two guys at all, but the real winner could be an entirely new class of people. People who are adhered to this decentralized capitalism of the future. They can go out and build things without asking permission of governments And that may be the ultimate message that we get as we come through this balance of the trade wars. So, welcome to this issue of the Steve Beeman Show. I'm excited to do it. I think this is a really deep and important one because I think it highlights both the really disparate view of the East and the West, China versus the US. I think that's crystal clear. But more than that, it begins to talk about and understand how the impact of the decentralized capitalism of the future is going to win out ultimately in this battle. I think it's critically important. I mean, we all see headlines that claim China's collapsing under its authoritarian weight. Others claim the U.S. is shooting itself in the foot with its $34 trillion debt, cultural chaos. I mean, I haven't seen this much cultural chaos since the 60s. Now, we survived that. We'll probably survive this. But there's something going on underneath it all. You know it. You feel it. I feel it. It's this movement out of the old school industrial capitalism into the decentralized capitalism of the future. I think this new economy, the battle isn't about tariffs and steel and auto production, but it's about control of capital, innovation, ideology, and global influence. That's the battle that's truly taking place. So the winner of this might just not be a country at all. It might be you. And that's exciting, truly exciting to me. So let's take a look real quick on this narratives. Let's break down the narratives that we hear. On one hand, we hear China's collapsing and America's rising. Well, the data doesn't really show that. I mean, investment is fleeing China. There's no question about that. That data is crystal clear. But it's not necessarily coming to America. And the supply chains have been rerouted and bent, but the supply chains aren't broken between China and anybody. And I'll give you some examples of that. So the popular narratives aren't really that accurate. I mean, depending on where you get your news, you're going to hear one of two stories. On one side, you're going to hear China's collapsing. The youth unemployment rate is unsustainably high, and it's growing. The real estate sector is collapsing. China's population is aging, and they're not replacing their population with their birth rates. They have a serious demographic problem. But they're still growing, and the authoritarian grip of the Chinese Communist Party is as strong as ever. So China's not out of the game. Now, the other side, you hear America's resurging. Manufacturing's coming back. It's returning home. Tariffs are protecting U.S. industry. The dollar is strong. The markets are, doing okay. Washington finally getting tough on Beijing. But here's the truth. Both of these narratives are wrong. They're illusions. Let's unpack what's actually happening in these countries. I mean, there's no doubt that foreign direct investment is fleeing China. So these numbers are crystal clear. Western firms, particularly in tech, finance, and manufacturing, have grown very wary of Chinese state controls, of their intellectual theft, and their regulatory unpredictability. It's not easy to do business in China. As we talked in earlier podcasts on these tariffs, when you looked at Trump's trying to equalize trade through tariffs, it wasn't just about the tax, the financial tariff. It's about the regulatory controls. If you look at Japan, for example, the dollar tariff they charge our agricultural goods isn't that strong. It's not that high. It's the regulations they put on our manufacturers that makes it tough to do business there. Well, China's the same way, but they go again a step further and they steal our AI. I mean, you know that. They steal our intellectual property all the time. But again, as this Chinese money comes out, where's it going? Clearly, some of the money is agreeing to come back to the U.S., but a lot of it's going to Vietnam, India, Malaysia, and other places in Mexico. These are kind of the new buffer states, if you will. And that isn't as clear a victory as you think, because the money's coming out of China, but it's not going to Main Street. It's going to these other countries. And you hear the politicians come out and say, we're bringing manufacturing back and all this. And some of that's true, no question. But let's look closer. Apple Computer didn't just suddenly open factories in Ohio. They've shifted final assembly. Now, some of the final assembly they shifted to India, out of China. So, yes, it's true they came out of China, but they went to India. But the parts, well, they're still made in China. I mean, here's another example I was reading about recently. We're an Illinois based textile company. I don't want to say who it is, but they switched from a Chinese supplier to an Indonesian supplier. Again, it looks in the media like, again, we're beating China. This is coming out of China. But here's the truth. The Indonesian supplier, they had still sourced 70% of its raw materials from China. China's an economic powerhouse. We're not going to cut them out all that easily. I mean, if you look on purchasing power parity, China is a bigger economy than the United States. If you look at forecasts of the next 20 years of GDP growth, you see China on top with India second, the US third. Now, I don't agree with that. I think those are static models that don't take into account a lot of stuff going on. But by the same token, we're not just cutting China out. Yes, they've slowed their growth rates. This has hit them, but it hasn't stopped it. They're still growing, just at a slower rate. But let's take a look continuing. Both nations, China and the United States, are declaring victory, but they're bleeding at the same time. China says, we're building the future with our Belt and Road Initiative around the world. You've heard us talk about that. The Belt and Road Initiative has ingrained communist China into countries around the world. Well, to counter that, the U.S. says we're protecting freedom with these tariffs and we're reshoring production. In reality, China's struggling. They have enormous debts. They have a demographic behemoth fighting against them. And the U.S., well, it's struggling with internal division, like we talked about, policy insecurity, and a hollowed out middle class and a debt structure that doesn't work. For the last 15 years, as I've talked to you about, the U.S. hasn't lived off organic growth. We've lived off debt. Now, this is heady stuff, and I wanted to talk about it partly because I think I have the most intelligent people following me. I don't think the average person can, necessarily understand this kind of stuff. But the people who watch these podcasts, you guys get it. You know there's more to the story than just what you hear on Fox News, MSNBC, ABC, CBS, whatever, Newsmax. I don't care who you listen to. There's more because these are complicated situations. The U.S. and China are heavyweights. We're the two powers in the world. We're in the ring, boxing it out and declaring victory. But it's not that simple because I think the rules of the game, the very rules under which they're in that ring fighting, are being underwritten and changed as we speak. Let's talk about that. Because right now it's not 1947, okay? We're not talking about who has more steel and oil production. It's also not 1985, where it's about GDP and inflation. And notice the change there. We went from the manufacturing economy to the financial economy. Well, we're neither of those anymore. This is a battle over who defines the future. And both America and China are playing, in my mind, an industrial age game in a post-industrial world. This is an era in which idea capitalism or decentralized capitalism will come to life. I mean, they want to measure exports and tariffs, but the new power that I'm talking about lies in data sovereignty, AI infrastructure, blockchain rails, and intellectual capital. This isn't a trade war. It's a values war. Both sides are fighting yesterday's war with last decade's tools. But they both pretend they've already won. Well, let me look and see how this plays out on these 5 issues that I was talking about. I think we can start to quantify who thinks they're winning the trade war, who might likely win the trade war, but then we're going to talk about why we ultimately take over all of it. How's that? So let's look at 5 things: tech control, trade resilience, cultural exports, internal cohesion and capital leverage. I mean, that will cut through the narratives from the general media and talk about what's really happening. And we want to really understand this because how we position ourselves for the future relates directly on how we look at 20th century issues in a 21st century economy. I don't think it's a tug of war at all. I think it's a multipolar battle for the soul and the mind of people. So here's my scorecard. We'll go down through this. When we look at technological control, the real weapons of this war are microchips and machine learning models. I mean, we've seen the AI games play out. China has its own, Elon Musk has its own, OpenAI has one, Microsoft has one. These large language models that are beginning to incorporate basic, and I mean basic AI into our lives are all over the place. Well, if we look at technological control, China has certain strengths. They have faster AI deployment, no question. They get it out, the infrastructure for AI, much, much faster. They have a full stack surveillance system built. They know everything about Chinese citizenry, both in China and around the world. They're making massive investments, huge in quantum computing. They're making investments also in facial recognition and 5G infrastructure. Those are real strengths for China. But the US, we have our own strengths too. We have very superior chip design. We're far, far ahead. Much more sophisticated cloud infrastructure. And we have private sector innovation as opposed to state-controlled innovation. I mean, OpenAI, NVIDIA, Palantir, these are private examples where innovation is taking place. We know, based on 100 years of history, that state-controlled innovation can't compete with free market innovation like we have in the US. I'm going to digress here for a minute, but I'm going to do a podcast on what I've called the jealousy economy. I am sick and tired of people criticizing Elon Musk or Jeff Bezos for how much money they make. These guys revolutionized the way we do life. I mean, to simplify this whole argument about the jealousy economy, if you want to go be Jeff Bezos, go invent something like he did. You want to be rich like Elon Musk? Go invent a rocket ship. I'm not that smart. I can't compete with these guys. But I'm not jealous of their success. I celebrate it. Anyway, we'll talk about that more. But that private sector innovation is a real strength for the US. We have terrifically deep benches in software development, and we dominate in patents and critical infrastructure. So on this technological issue, you got to give the win to the United States. On my scoring, I gave them 8 points. I gave China 6. So we have about a 20% winning edge over China in that. But let's look at number 2, trade flow resilience. Who can absorb the shock of a trade war? I mean, is it the US or China? I think you know where this is going to get down. China has not just full control of its population, but they've built relationships using the Belt and Road Initiative, all through the undeveloped countries. And they've also pushed the BRICS countries to dethrone the dollar. I mean, they're using this trade war coming hard at the U.S. dominance of the globe. Well, they have support in Eurasia and Africa, but the U.S., we're strengthening our trade ties with India, Vietnam, Mexico. We also have domestic energy production, which is a serious buffer. Now, our 2 biggest weaknesses, we're very vulnerable to the global supply chain, and we're addicted to cheap imports. That's part of what caused our problem in the United States, is people wanted cheap. So instead of paying American manufacturers who might be more expensive but a higher quality, they just went to the cheap imports from China. And that's happened over 40 years. It's not the total reason, but it's happened. So on this, when you look at the trade flow resilience, the ability to withstand the shock, I think it's a tie. I think both the US and China are exposed. I mean, they both have fallback plans, but they're both very exposed. And I don't think either side dominates the chessboard in that, if you will. Going to cultural and ideological exports and who controls the culture and the ideology, clearly the US dominates. Our media, entertainment, education, financial languages, we dominate. American-style capitalism is exported by everything. Now, China, they're making inroads in Africa and the Middle East and South America, with a model of what, let's call it authoritarian capitalism. They're certainly not socialist in the Marxist way, but they have an authoritarian capitalism that they're trying to brand around the world. But that lacks cultural appeal. I don't think people in general like the authoritarian model. I think that's why we've had revolutions forever. Individuals want to run their own lives, and the authoritarian model of China is old, it's outdated, and it won't work. So on this of cultural and idea, of how something works, clearly the US dominates that. We're 2-1 over China. I mean, you can build infrastructure, you can't export soul. And the American model of freedom and democracy and a Republican democracy and capitalism has dominated the world for 50, 60, 70 years. And I think will continue to in that aspect. But let's look where that comes now into cohesion. Because as we know in the United States, we've got another election in 2 years. That could disrupt this whole agenda. In addition, we've got people in Congress fighting against it. Rand Paul comes to mind. So it's not a smooth sailing for Trump to get it across. But if we look at cohesion, China has no elections like we do. They have no dissent. It's total control. But they have an aging population with a very disaffected youth. Their 20-somethings are not very happy because they don't see opportunity growing for them. The real estate sector that China used to build its economy over the last 20 years is collapsing because there aren't enough people. And again, their demographic slide is real. Now, the US, though, we're divided politically. We're fragmented socially. Everybody watches their own media. We watch our own anything. I mean, I was on a phone call this morning talking about how it's changed so much. With the invention of cable news and the 24-hour news cycle, news became entertainment. It's no longer who tells the truth or who did better reporting. Now it's about who spins a story that's consistent with an individual's worldview. And because there's so many opportunities of this, you can pick the one that fits your flavor. If you want to be slightly to the left, you can go to CBS, NBC, ABC, let's call that there. You want to be to the right, you go to Fox. You want to go farther right, you go to Newsmax. You want to go farther left, you go to MSNBC. You pick your own. Some of us are just going to HGTV now, the pox on both their houses. But you look at how the U.S. is handling that. We are a dysfunctional society. We always have been, but we're very split in our population. Trump has a very thin majority. I know they talk about he won all the swing states. He won the popular vote. And that's all true. But look at the percentages. We're very much still a 50-50 country. So if you look at internal cohesion and the ability to enforce cohesion to sustain a drawn-out trade war, you got to give the lead to China. I mean, they have control. I don't think it's sustainable, but they have short-term control over their population, and that is going to give them the edge when it comes to who can handle the disruption better. But let's look at the capital markets and financial leverage, because this is a critical component to a 21st century economy. And the U.S. is still the dominant factor. We're the global financial leader. There's no question about it. The dollar is still dominant. The New York Stock Exchange is still the behemoth of the capital providers. I mean, despite our $34 trillion in debt, people still buy treasuries when all else hits the fan. So the U.S. is still the dominant capital player. There's no question about it. I mean, China, they're trying to respond to that by building a digital yuan, their currency. They're expanding an alternative to the SWIFT process, which is how companies and businesses move money internationally. They have something called CIPS. They're trying to replace and kind of just move people out of SWIFT onto SIPS. Well, capital controls and a lack of transparency by China are going to hurt them here. Business flows to freedom, doesn't flow to authoritarian control. So the Chinese on this, I have to give a substandard score. I think it's an 8-5 win on the part of the United States. So if we look at how we're kind of coming on this, technology control, I give it's a little closer, but an 8-6 U.S. favor. Trade flow, balance. Cultural and ideological export, I give that strongly to the United States and the Western countries. Internal cohesion, I have to give that one to China. They can withstand this better than we can. But capital leverage, again, that's strongly to the US. So as I score this, and it's my boxing match, right? So I can score it. I come out with 36 points for the US and 28 for China. So that would tell me the US has a slightly higher advantage of winning this 20th century trade war that we're involved in. And yes, I said 20th century because I think the 21st century belongs to a decentralized economy. These guys are battling over trade flows and manufacturing. I think the battle is over, what would I call it? Information networks and tokenized value. Machine learning, robotics, AI, metaspace, the integration of what's going to be called Web 4 is going to dominate the 21st century, not the old school tariffs and trade wars. And let's talk more about that because I think the winner in this trade battle might not be a country at all. It might be you. I mean, at the core, if the US holds the advantage, and let's consider a question though. What if this trade war, what if the entire economic rivalry that we've laid out isn't even about winning in the traditional sense? What if it's a distraction from a much bigger shift that's happening beneath the feet of the superpowers? I mean, while the US and China focus on factories, tariffs, and central bank strategies, a new global architecture is emerging that's driven not by nations, but by code, capital, and connected minds. It's the idea economy of the future. I mean, let me dig into this. Across the world, entrepreneurs, engineers, investors, and creators are building digital first economies, tokenized value systems, AI powered autonomous organizations, and decentralized financial networks that ignore borders altogether. I mean, they don't need tariffs. They don't care about GDP. They're not fighting over who controls the past. They're focused on the future. I mean, this is the dawn of what I've written about and called decentralized capitalism. It's a new model. Going back to 2010, when I started talking about this, and I was talking about we were entering an era of the post-industrial capitalism. I looked forward and I thought, we're heading toward a completely new model where the notion of capital changes, where the notion of value changes, and decentralized capitalism is where it's landed. This is a thing where capital is intellectual, markets are borderless, ownership is thoroughly distributed, and economic agency belongs to the individual, not to the countries, not the institutions. It's true power to the people. China's model is centralized, controlled, and scaled obedience. America's model is financialized freedom with debt-driven consumption. Neither one of those is sustainable. I mean, one strangles innovation, the other commoditizes it. So decentralized capitalism is different. It's post-industrial, it's idea native, it's adaptive. It thrives in the digital layer of the world, not on land, but in logic. Most importantly, though, it doesn't require the permission of Xi Jinping or Jerome Powell. It's dependent on you. I mean, that's a revolution that no one in Washington or Beijing wants to address. It scares the politicians to death because in the new decentralized world with decentralized capitalism and idea capitalism, the power belongs to you, not to the power brokers. And that's a new model of life. It's a new model of economics we've never had before. So I think the winner in this US China trade battle might not be one of them at all, but it might be you. In a model of decentralized capitalism, the winner is the developer in Kenya who develops a Web3 or Web4 financial rail. It's a teacher in Ohio who's learned to tokenize their curriculum. It's a community in rural America or rural anywhere that's learned to manage themselves by a DAO. It's a network of thinkers, builders, and capital allocators who've stopped waiting for the old system to be fixed. In a sense, again, the winner is you. But you have to learn to choose to operate outside the box, and a box that really wants to keep you in. You know, there's metaphors all over for this, but in my life, I've talked about the crabs in a bucket. And when one crab tries to grow out of the bucket, if it gets high enough, the other crabs will pull it back down. Well, the question is, as we migrate into this tokenized, decentralized capitalistic world, are you going to stay in the bucket or are you going to get out and start be part of it? I mean, while the US and China argue over steel, chips, and tariffs, the next generation of thinkers is coding new nations into existence. They're building wealth no longer tied to borders, no longer tied to banks, and no longer tied to bureaucracies. So, to kind of put all this in perspective again, the US may hold the economic firepower, China may hold state control. But the real winners are those who learn to adapt into a decentralized world. I'd ask that if you find this interesting, you share this episode. I am a passionate believer in decentralized capitalism. I have a new book coming out about it. I'm on the road speaking about it. Decentralized capitalism empowers the people to exist in a frictionless economy, not constrained by banks and governments, but constrained by their own ideas. I think it's an exciting, true golden era, but it's not golden era because government did something right. It's a golden era because people will prevail. And I have a lot of faith in people. So I'd ask you to share this video, share the clips. Let's build the community of intelligent people looking for the future, not living in the past. Because the future belongs to you and me, and it belongs to a decentralized, decentralized capitalistic world. And it's going to be built by those who understand freedom and liberty of an extreme nature, not industrial or authoritarian systems. And it's not science fiction. It's already here. So thanks for being with me on this episode of the Steve Beeman Show. Stay sharp, stay sovereign, and always stay free.